In this video, we are going to deal with the issuance of stocks. We're going to journalize these following entries. The first entry is on March 23rd, 2021. So this company settled a $15,000 attorney bill by issuing 1,400 shares of a $10 par common stock. Okay, we want to begin by highlighting the important information. So in this case, it is the $15,000 bill issuing 1,400 shares of 10 par common stock. Okay, now when we journal this, we want to begin by writing the date. So March 23rd. No, this is actually April. January, February, March, April. So it's April 23rd, 2021. And you want to begin by debiting cash. And how much cash would you debit? It would be this amount. So 15,000. And you want to then credit common stock. So write down common stock, and the value of this common stock would then be the number of shares, which is 1,400 shares, multiplied by 10 par, which is $10 per share. Okay, so if you multiply this out times 10, you get 14,000, which you will then credit 14,000 here. And then notice that this 14,000 does not equal the 15,000. In order to make them equal, you need to add APIC, which is, I recently learned that it stands for additional paid in capital. And you want to do it for common stock. So C-S means common stock. Therefore, okay, what value would this be? You would then subtract 15,000 by 14,000, which gives you 1,000, because this is anything that's left, okay? Because we only paid 14,000 in common stock, we need to pay 1,000 more in order to make it equal 15,000. So these will be our values for the first entry. Moving on to the second entry, April 30th, 2021, the company issued 20,000 shares of $10 par common stock to management at par value. Now we're going to highlight the important parts. The important part is that issued 20,000 shares at $10 par to management, $10 par common stock to management at par value, okay? Okay, so let's begin by writing the dates down. So April 30th, 2021, we are going to debit cash once again. And how much in cash? It would be 20,000 shares at $10 par. So 20,000 shares at $10 par. So if you multiply that, you should get 200,000. And you do. So 200,000 right here. And then now you are going to credit common stock. And since common stock is $10 par, we are doing the same thing as we did with cash. Common stock, we are going to multiply 20,000 shares by $10 par, which gives you 200,000. Okay, now you're done with this entry. Moving on to the last entry, we purchased land with a fair market value of $325,000 with 15,000 shares of common stock when the stock's fair market value was $23 per share. Okay. It's important to know that we are purchasing land. Okay, we're dealing with land now with a fair market value of this 325,000. Okay, now the other important thing is that we have 15,000 shares of common stock when the stock's fair market value was $23 per share. Okay, now when we write our journal entry, begin by writing the date: January, February, March, April, May 2021. Purchase, we are going to begin by writing land because we are purchasing land. Therefore, we're debiting land because land is an asset, and assets increase on the debit side. Okay, so what would be the value of the land? The land would be 15,000 shares multiplied by this number. So fair market value, which is 23 per share of fair market value, FMV. So this means that when we multiply 23, you get 345,000. Therefore, we are going to debit 345,000. And now we're going to credit common stock. And common stock will always be the amount of share, which is not 20,000. It is 15,000. So 15,000 multiplied by the par value, which we learned that $10 is the par value, which should give us 150,000. Yes, so we write 150,000 here. Then, because 150,000 is not equal to 345,000, we still need to add additional paid-in capital, APIC, of common stock. So, stock. How much would that be? It would be this number subtracted with this number. So 345,000 subtract 150,000, you get 195,000. And then you credit that value for common stock.